Hello guys, welcome to another great video in our online trading series. In this video we'll be looking at trading terms that we'll often come across as beginners and maybe we don't understand what they mean. Now the first thing we want to look at are trade types. Now for the buy and the sell, we've looked at that before, so I won't be explaining that again. But we're looking at the other four types that exist. There are a few others, more advanced trade types, but these are the basic ones we need for this series. I might look at the others later. In total, there are more than 6 ways to send trades to the MT5 or CTrader platforms. You have the buy and the sell, then you have the buy stop, the buy limit, the sell stop, and the sell limit. The buy stop and buy limit. The buy stop and the buy limit are both pending orders that are placed at a set distance above or below current price. The price is determined by the trader, and the execution of these trades depend on whether price reaches any of the placed orders before they expire. An expiry time is sent with the order as a deadline that if price does not touch our order before the time, the order should be deleted. Now for example, you send the buy stop order, you give it a deadline. If the time now is 2 o'clock, you can say if by 4 o'clock the price has not touched this order, let the order be deleted and forgotten. For the buy stop and buy limit, the difference between the buy stop and the buy limit is their position. Now why these orders do exactly the same thing, they have a difference. When you wish to place a buy above current price, if you want to buy above the current market price, you use the buy stop order. But if you want to buy below the current market price, use the buy limit order. So if the price now is, let's say 300, and you want to buy when the price gets to 400, then you can place your buy stop order at 400. But if the price now is 300 and you want to buy when the price gets to 100, you can place your buy limit order at 100. Now these placements are standard. You can't place a buy stop below current price or a buy limit above current price. The reason why they are separated is so you can place them in specific positions against the current price. Now for sell stop and sell limit, it's basically the same thing as the buy stop and buy limit, but in this case you're selling at a price above or below current price. But the difference here is that in sell stop and sell limit, sell stop is for when you want to sell below current price. You know, buy stop is when you want to buy above current price, but sell stop is when you want to sell below current price, and sell limit is when you want to sell above current price. So if you have the price at 300 and you want to sell at 400, then you use the sell limit order. But if you have the price at 300 and you want to sell at 100, then you use the sell stop order. That's just it. Then you have take profit and stop loss. These are two prices that you send with your trade. Take profit is the price where you want to close and pocket your profits if your trade is winning, while stop loss is the price where you close a losing trade to cut and accept your losses. For example, you open a buy Euro USD at 1.23451 and you set your stop loss at 1.23351, which is minus 10 pips, and then you put your take profit at 1.23551, which is plus 10 pips. If price goes up to your take profit price, then the trade will close with a profit of 10 pips, and the money equivalent of that profit will be added to your account. But if price goes down to hit the stop loss, you will have a loss of minus 10 pips, and the money equivalent of that will be taken from your account by the broker. Next is the trailing stop. This is an automated profit following method. If you have no specific amount of pips that you desire from a trade, you can use the trailing stop to follow profit for as long as profits keep growing. For example, you have a trade and you don't have an idea where to put your take profit because you feel the trade might go very far. You can use your trailing stop to follow the profits till the profits reverse. Then your trailing stop will close and give you what it has made so far. Now if you set trailing stop to 10 pips in MT5 or CTrader, using the Euro USD trade as an example, the trade from the previous slide, let's say we use that as an example and we take away the take profit from that trade. Instead we use a 10 pips trailing stop. Now when the trade reaches 10 pips profit, the stop loss is moved to your entry price because you're using 10 pips. Now at 10 pips profit, they move your stop loss to your entry price so that if price goes back for 10 pips, your trade gets closed without loss. But at 11 pips, the stop loss is moved to +1. At 12 pips, the stop loss moved to +2. At 30 pips profit, your stop loss will be at +20 because stop loss is now 10 pips behind your current profit. And if your profit keeps going to 50, 60, 70, your stop loss will be 10 pips behind what your profit currently is. But when profits now reverse for 10 pips, for example, it's at 55 and it drops to 45, your trade will close with 45 pips profit. Now when profits reverse for that set number that you used as your trailing stop, that's when the trade will be closed. Now trailing stop only moves forward as price grows and closes when profits fall to its last peak. Now thank you for watching this video. If you enjoyed it, please stay on and there will be more on this course. Thank you.